One of the most popular themes or concepts that in our circle today is generational wealth. Question that a lot of people have is that, particularly as it relates to African Americans, we flow a lot of money. Sometimes we make a lot of money. But now, according to certain statistics, money only stays in our community about 6 hours, which does not give us an opportunity to create a legacy and build generational wealth over the years. Well, more than a little happy to tell you that we've got a young man on our show today who not only is very interested in generational wealth, he has come up with a concept that can be utilized if we pay attention to kind of generate more generational wealth in our community, no pun intended. And that young man is Mr. Milo Pinckney, who comes up with a broad range of experience. And I'm trying to bribe him. He got this phenomenal motorhome that I had the opportunity to visit. So I'm trying to bribe him to let me use that motorhome. He doesn't know I got it. Just kidding. Ulterior motive. Just kidding. But it's my pleasure um, to have him on the show and to let him tell a little bit about himself and to kind of familiarize us with the concept of generational wealth. So, Milo, if you would just start giving us a little background on yourself.
Well, I'm not so young. I'm 66, but I've had um, a long career, entrepreneurial career, which started literally in my junior year in high school. I was a bit of a geek and developed one of the early laser lighter modulators that was used in the early days of disco. So that kind of tells you about my age. And later on got involved in private sector, private equity arbitrage on the international stage, and have been buying and selling businesses since the early 90s. So we owned American University School of Medicine, Xavier University School of Medicine, St. Eustatius School of Medicine. We've had engineering firms, manufacturing plant in China, and real estate operations in New York, Atlanta, and Texas. And upon retirement last October, I started on what will now be my sixth career in writing books, but not storybooks or biographical books, but books on methodology to replicate what I have done in my career for those coming up, just getting started. Um, I've always felt very strongly that one of the deficits in our community is that not only do we not pass on wealth, we don't pass on information. And where our uncolored counterparts, especially in the Jewish and Asian communities, um, their real wealth is the download of knowledge from generation to generation. If you have the knowledge, the money naturally follows. But if you don't have the knowledge or the wherewithal to utilize it, it usually ends right where it started. And that's been the ostensibly a plague that has adversely affected our community disproportionately to our non-Black counterparts. So we talk about wealth, and it's interesting to me because money. I don't know anybody if I ask them, do you want more money? Who will say no? Everybody wants more money, but they don't realize that money is almost meaningless. It's if I put a hammer in a carpenter's hand and the carpenter didn't know how to work with the hammer, it's not a very useful tool. Same is true with a screwdriver or a multimeter or any other skill-specific tool. And money is nothing more than a tool, no different than a hammer or a screwdriver in the hands of a skilled utilizer. And so one of the things that we've sought out to do is teach our youth how to actually use money as the tool that it is to grow not just accumulated wealth, but sustainable wealth. Because in the Black community, and just again, disproportionately so from our other counterparts, the Black community doesn't know the difference between rich and wealthy. And there's a huge difference between rich and wealthy. You know, the rich man finances a car for 7 years, and he finances a Mercedes, BMW, or luxury car. And the wealthy man drives a paid off car that he's had for 10 years. And he maintains it in near new condition, and it costs him less than replacing it every 3 years, like the rich guy. And the wealthy guy has assets. The rich guy spends a lot of money for stuff, but most of the things he owns are depreciating. Where the wealthy guy has assets that are generating sustainable revenue for him. Uh, the rich guy has no time because he has to work to support all his show of rich,
Mm.
where the wealthy guy has time because he's invested his dollars to
Right.
produce sustainable revenue. And those are some of the fundamental differences. And I have a list of about 20 more items that differentiate the two, but I was fortunate enough to grow up in a household where my father was a very successful physician and my mother a very successful educator. She actually founded the graduate school of public health at Lincoln University. She was a economic advisor to John Lindsay, mayor of New York, and to Jimmy Carter, president of the U.S. She was secretary of commissioner of mental health for New York State during the Cuomo administration. And my father was an OBGYN who invented a bunch of medical devices. And so I grew up in a very affluent white Jewish neighborhood. I was one of 17 Black kids in my high school. And and I grew up with friends whose parents were all, doctors, lawyers, Indian chiefs, heads of businesses and business owners. And I realized very early in my upbringing how my Black friends' parents worked for somebody, and why my white friends' parents employed people.
Mm.
And it was very visible. It was telling how visible it was. It was almost palpable, the differential. And even though my Black friends' parents were, middle class, solid middle class, in some cases even affluent, their life and their use and understanding of money was very different from that of my white friends. And my father, my father had a very warped sense of humor. He took great pleasure in reminding my brothers and I that he and my mother were wealthy and that our behinds just lived there. And that come our 18th birthday, that honeymoon was going to end abruptly. So he always used to tell us, I'll put it in your head, but I'm not putting it in your wallet. And he did. And he made it possible for us to learn anything that we had an interest to learn. And I learned very early that I didn't want to work for a living. So I started investing when I was literally in high school, and I built my first business in high school. I sold it in my junior year in college for significant gains. And I'm probably 30 businesses since then that I have bought and sold. And I've made, I've made millions of dollars on individual deals. But I realized very early that it's not how much you make what's important, it's how much you keep. And now what we do is we're writing books and we're teaching people how to do that too. But getting people just to read the book isn't enough. What we do is we're actually holding classes now. And we where I met you at our venue in Juliet, we're actually going to be doing weekend seminars. And the idea is to actually bring people in, especially young entrepreneurs, teach them how to do it, align them with our network of talents, and so that they have the support to be successful. Because if you look at most entrepreneurs, Alex, it's interesting. And having been an entrepreneur, I made this mistake in my early career. And two of my companies I took public. And we are good at something. You know, a guy is a car fanatic and he's great at detailing a car, so he starts an auto detailing business. But he doesn't know anything about running a business. He doesn't know marketing. He doesn't know finance. He doesn't know about capital reserves and reinvestment strategies. He doesn't know about tax planning. So he doesn't really build a business. He builds a self-employment. And too many of us, especially in the Black community, don't know the difference between self-employment and actually being a business owner. And it's it's a very easy illustration because when you're self-employed, when you stop working, you stop earning. When you're a business owner, when you go to sleep, you're still earning. And I realized very early that, as I said, my father was a gynecologist. I didn't want to go to med school. I opted to own med schools because whether I was at the school or out on my boat or flying my airplane, I was still generating income because the people that I employed were producing my earnings. When you're trading hours for dollars, you're limited to 24 hours. And there's only so much somebody's going to pay you for any one of them. And that's what our young people need to learn. And they need to learn it, especially now in the advent of AI, where many of the entry level jobs are going to be erased and replaced by, AI programs. Um, I'll digress for a second. I got on the phone the other day and the company, I was speaking to an AI and actually thought I was talking to a human being. It was that functional. And it was doing all of the client vetting for this business. My wife and I are looking to install a pool at our property, and it, everything was this AI. And I said, look, if you're not, I'm glad to talk to somebody but if there's nobody in sales that's human that wants to talk to me, I'm not interested in doing business with you. And I hung up because it was an AI. Um, but that's only going to work for so long. Most of these young people who are coming out of college today, seeking entry level jobs, they're going to be in their parents' basements for years to come, especially if they're a darker shade of pale.
Wow.
Because the limited number of jobs that are going to go out there, disproportionately those jobs that are available by non-Black owned businesses, and they're going to be filled by their kids before they're filled by ours. So we've got to either create the jobs or create the businesses that employ our community. And the best way to do that is to start with the youth. You and I are old guys. Um, we're on the back 40, as it were, you know. And I intend to ride the downhill path very comfortably, but I recognize it's on the downhill path. And the ones that are coming up the hill, they need the support and they need it from us. And we can't tell them what they need to do. We need to show them, hold their hand, and assist them in doing it.
So let's kind of get into an action plan. Let's pull on your experiences. As I mentioned at the beginning, incidental, this is a call to action. I'm your host, Alex Haversham, interviewing entrepreneur extraordinaire and the person of Mr. Milo Pinckney. And again, I appreciate your being on the show. But Mr. Pinckney has written a book called The Wealth Circle. And out of his concern for the community and building generational wealth, he thought would not be robbery. And that's what we need. I hope you all paid attention to his saying the importance of information and education. So I think this is a bridge to the kind of information and education that we need. to build wealth, not to be rich, but wealthy. So talk a little bit about the Wealth Circle, which is the name of your book. We also want to let people know that they can, it's at Barnes and Noble, and that's where I ordered mine from.
Yeah.
And on
Amazon, Barnes
Amazon.
and Noble, Apple Books.
Yeah,
It's pretty
yeah,
much everywhere.
yeah. So talk a little bit about the Wealth Circle. What drove you to do it, and let's talk about some of the points and
Well,
lessons.
in quick, what drove me to do it is everything that we were just talking about. And what I've always been frustrated by the various books that are out there that teach you about, investing or finance or money. They don't have a call to action. They discuss a philosophy or an ideology, even a belief system, but they don't give you something tangible. And they always speak in very lofty terminology that unless you're already in the community or in the sector, you spend half your time looking up the words that you're reading. So I wrote a book that is written in simple English, and it's written with the intent to speak to people who have little to no investment knowledge or background, and to provide them executable task and direction so that they can take what they learn and translate it into revenue producing activity and increased knowledge and comfort. And I'm going to speak, I hate to break it down to black and white, but we live in a black and white world, more so today than ever before. So I'm going to keep it real and just speak in the terms that we've written it in. This book was designed for our community. It was designed to address a problem that is disproportionately prevalent in our community, and it was designed to create an incentive to act, to move. We don't need to just read books and talk. We need to actually execute because knowledge without action is meaningless. We and it's really very simple. When I speak to people at our investing seminars, I talk to them. If I told you to go across the street and get me a Coke, you'd walk to the edge of the curb, you'd look at both sides of the street in either direction, you'd step off the curb, you'd see the cars coming, and you would judge whether or not you can get to the other curb before the car runs you over. You'd get the Coke and repeat the process and come back. It's a real simple task, and you use your brain in the same manner that you need to use it to invest. It's really nothing more than walking across the curb, off the curb across the street. And it's a series of actions you have to execute and a series of disciplines that you have to do so successfully. And so we've outlined those disciplines, we've spelled out the actions, and then we've taken it a step further because in addition to the book, we own Private Syndication Club, which is a private equity bank based out of New Jersey. We now have offices here in Atlanta. And my partners and I not only are teaching our folk how to invest, but we'll invest right alongside you. So, one of the things I've always told people is you go to the bank. I get these calls literally every single week, and I laugh at every time I get the calls. Usually somebody from the wealth management department at some bank, Wells Fargo, Citibank, what have you. And it's some guy who's driving a Toyota Camry, who's making $65,000 a year, and he wants to give me, wealth building guidance and advice. And then, it's usually some hedge fund that he wants me to invest in, or a mutual fund or an ETF. And I always end the discussion with the same question. It usually begins and ends with the first question, which is, how much of your money do you have vested in this vehicle that you want me to invest money in? Well, I'm not allowed to discuss my personal investment experience or history. I said, well, I'll tell you what. When you're driving something other than a Camry that is, or if you're driving the Camry, as long as it's paid off, it's a recent model and it's paid off, and you're able to discuss with me how much of your money is in this, you really don't have much to talk about because why would I put my money in something that you don't have your money in if you're selling it to me? Now, that's the first thing I tell our folk. If somebody presents you with an investment opportunity, I want to know how much of their money is in it and how much more of their money they're going to put into it next to yours. Because if it's such a good deal for you, it surely is a good deal for them. So we put our money where our mouth is. And any reinvestment that we offer our clients, we invest right alongside with them. And in fact, we guarantee our returns to our clients because the biggest problem in the Black community when it comes to investing is fear of loss. In fact, I will tell you that the Black community's fear of loss outweighs its desire for gain
Mm,
by a factor of about 7 to 1.
mm.
So one of the ways that we break the fear of loss is I'll put up matching funds. You put up 1,000, I'll put up 1,000.
Wow.
And I'm so confident in what I am telling you to get involved in that I'll guarantee you a return. And if you don't achieve the return that I've projected, I'll pay it myself.
Wow.
Because we have to get the only thing that Black folk trust and believe in blindly is the Bible and their pastor. But when it comes to the things that are going to ensure that their children have a home to live in and their grandchildren can afford an education, that they don't trust. And they are so fearful of losing the few little shekels that they have that they won't invest them to grow. And you can't, we've already established there's only 24 hours in a day. So and there's only so much I'm going to pay you for an hour of your time. And I got to assure you that it's going to be less than I'm going to pay for my time. So the formula, the math doesn't work. And you cannot save your way into wealth. You have to invest your way into wealth.
Wow. Wow. So is that
So,
why you call it a circle? Expound on the circle concept.
well, it's interesting. Most people, Alex, when you speak about wealth, they think that you have, or investing, they think that you have to begin to start with a lot of money. You have to have a lot of financial knowledge, and you got to have a ton of money to invest to make money. So they say, well, when I have more money, I'll invest. Well, you'll never have more money. So you need to invest now. And the truth of the matter is, it doesn't take a lot of money to invest. And if you don't have a lot yourself, one of the ways to get there is to create a circle of friends to invest together.
Wow.
You know, I will tell you, I represent and manage funds for some people who you see on Wall Street Journal every week. And it's funny, these are some of the, biggest investment names out there, and yet their family investment funds, their home office, their private family office, back office, invest through me. And some of my clients are running the biggest hedge funds out there, but their families use me. Well, why is that? Because the hedge funds are regulated and the private sector investment is not. So they can get much higher returns through the private sector investment than they can through the regulated sector. So they do their regulated stuff for their business, and the money that they make from their business, they want greater gains. So they go to private investment like people like myself. So why is it that the wealthy white people are using us, but we are going to the institution and we're buying ETFs through Chase Bank? It makes no sense.
Right. You know
So
what?
the wealth circle is the methodology with which we can combine our resources, combine our knowledge, share our accumulated knowledge, because nobody can know it all. But you know what, Alex, you can study the financial sector, and your wife can study the real estate sector, and our neighbor can study the automotive sector, and somebody else can, and we can come together on Friday night and discuss what we've learned based upon the homework assignments we got last Friday. And Monday we can execute an investment, and we can all pool our resources. And because we're sharing the knowledge and combine the resources, we can increase the rate of gain and reduce the rate of loss. by diminishing the risk thresholds. It's really simple formula. You know, I doubt many of your listeners know about susus or kusas, but that was the way, West Indians and slaves, freed slaves, bought homes. They got together and they pooled their resources and they helped one another grow. If you look at the Amish and the Hasidic Jews, I'll use the Amish as an example today. Um, the Amish have what they call a barn raising. And when an Amish couple gets married, the whole community comes out and everybody brings a piece of wood from their property. And they raise a barn or they raise a house for the new couple.
Wow.
Why are we not doing this in the Black community?
Yeah.
One of us does well, and the first thing we're looking to do is tear him down. I used to have I'll digress for a second and share this with you. You'll find this amusing because you and I are a similar generation. Um, I used to have a cartoon on the wall in my office, and it had 4 panels. And the first panel had the group of Italian guys and the masons, and they were building stairs to help their guy get over the wall. And the next panel had the Irish, and they were hammering together. They were carpenters, and they were hammering together a ladder, and they were helping their guy over the wall. And then the third one was the Asians, and they were tying the bamboo together and creating a ramp to help their guy over the wall. And the fourth panel had the black guy, and the black guy was up the ladder, had one leg over the wall, and there was 2 guys at the top of the wall trying to push the ladder off the wall. And at the bottom of the ladder, there was a guy with a chainsaw. And it epitomized the difference between those 3 cultures.
Wow. Wow.
And I kept it for years to motivate me to make sure that when I met a young person of color who was trying to do something positive, that I remembered to help him instead of be an obstacle for his success. Our fellow Black success is not a diminishment of us. A rising tide rises all boats together.
Right.
And we've got to create a rising tide in the Black community. And it starts by those of us who have been fortunate enough to do well, owning our responsibility to pass it along.
Yeah. Well, thank you so much. This has been nothing short of phenomenal as it relates to what we can do to improve our own community, improve ourselves, and build generational wealth. So thank you so much. Really appreciate it, brother.
My pleasure.
Yeah, this is a call to action. I'm your host, Alex Havisham. Have a great day.
www.makingblackpages.com